Welcome to the Intelligent Investing Podcast, where modern portfolio theory can suck it. A student of the School of Graham and Doddsville and a clergy member of the Church of Warren Buffett, here's your host, Eric Schleien.
Hi, this is Eric Schleien. You're listening to the Intelligent Investing Podcast, and today we have back on after a while Gobi, who runs Juby Investments, based in Alexandria, Virginia. Gobi, welcome back to the show. It's been a while.
Thank you, Eric. It was a pleasure. 3 years ago we talked, and I'd love to talk a little bit more.
Yeah, so I don't think it was 3 years ago. I don't think I've been doing the podcast that long, but you were definitely one of the.
I was the fourth one, I guess.
Were you fourth or fifth? It was one of those.
It could be, yeah.
Yeah, but I think you were actually the first podcast I had ever recorded to hit 1,000 downloads as well. I don't know if you know that, but I'm pretty sure that's a statistic. But wow, dude, that was a while ago. And yeah, just a little backstory. So we were at I was at the Markel annual meeting. Was it about a month ago now?
Yeah, it's about May 13th.
Yeah, and one of us spotted the other. What, did you come up to me, or how did that happen?
Yeah, one of my friends said that, like, look, Eric. I was like, which Eric? Like, Eric Schleien. I was like, hey, I know that guy. I never seen him in person. I talked to him on his podcast, and then I just walked over, and you were at one of the buffet area, and then we chatted and while we were eating.
No, of course, I'm a big foodie. You know what's weird though is in Omaha, I had a few people come up to me this year who go, I recognized your voice.
Huh? You're famous now.
Jesus, yeah. So I wanted to. I've been following you, and you post your letters on LinkedIn. Is that how I've seen them? Was it LinkedIn that you post your letters? That's
possible. I posted on my website too, okay. And you could have spotted through LinkedIn or my website.
All right, cool. So I thought it would be in it because you do some global investing, you do some indie investing, and then I remember at Markel you said you were starting a fund, and maybe you'd like to talk a little bit about the India fund that you're starting a little bit later in the show. But you do a lot of global stuff, right?
That's right. Yeah.
Yeah, and I thought your global approach to value investing was interesting, and you have a cool way of thinking about things. So what have you been looking at recently on a global scale? Like, what countries do you look at just to start with?
Yeah, I don't go by the country. I just go by the specific idea, business per se. And
so you'll look pretty much anywhere.
Yeah, okay. It's pretty much open, emerged, domestic, anywhere. As long as I understand that the business is in question, as long as I understand some level of comfortability about the business landscape in the country, and some sort of comfortability on the government regulation and things of that nature in that particular country. Mm-hmm.
Are you willing to invest in places where you're not comfortable with the government, but you're willing to take the risk because something might be very, at least on the surface, very cheap?
Probably not, because okay. I had my share of losses that way. So.
Really? Well, can you tell us one or two horror stories?
I can give you one. Okay. Maybe 5 years ago, maybe 4 years ago, I invested in a company called CTC Media in Russia. So this company is one of the largest broadcasting TV stations company in Russia. They had something like 35% market share. You're talking about like a oligopolistic business. And the company was selling for they never had any debt. The company was throwing lots of free cash flow around. And the company was selling for cheap because the Russian Oil Embargo happened in 2014, maybe 2013, 2014, 2015 time period. Almost all the Russian stocks are generally selling for cheap. So I chose to go with the one with just very, very strong business with a lot of free cash flow, and ended up having my head handed to me.
So what exactly happened that you got killed?
So basically, the stock was down, so I started buying it, and which was less than 10 times free cash flow for a business, generated something like 50% return on capital, and they didn't have any debt. And there is two founders control the company, of Russian founders, and then there is this a Dutch-Swedish company who had 20% stake. And I bought this, and then the stock continued to go down. and let's say it went down like another 50% from my purchase price. And now the country realized that's one of their national assets, and they thought that a cheaper price would attract lots of investors to buy in and potentially have a control over a Russian media company. So they proposed a rule saying that non-Russian owners cannot own Russian media companies anymore.
Interesting. So
And
what
then
what happened to your position? Were you forced to sell it, or how did that work?
I was forced to sell it because the stock went down, and then maybe 6 months later, the rule officially came into play. And at that time, like pretty much the other oligopoly company basically bought this company at a very, very cheap price, and that was the price, and we gotta get away.
Jeez, that sucks.
Yeah.
Like, I don't know what else to say. Like,
Yeah,
that
good
sucks. That really
way to
sucks.
start a podcast, right?
Yeah, no, hey, Buffett starts his letters with, "Hey, here was our biggest mistakes this year." So, I know, I think I actually like hearing those stories. I find them sometimes more interesting, actually. You know, the last thing that I want is it becoming like a Warren Buffett jerk off session on the show. You know, where I'm a value investor and I like to buy companies with good management and a good price, and you know, you bring on 100 people, they can all say that it's some way. But you know, talking about some interesting Russian stock that you got screwed on, that's way more interesting to me. Or you know, some weird obscure investment in India. You know, that to me is a lot more interesting than I bought a bank at 12 times earnings.
Right.
So
Yeah, hopefully we'll never make this kind of mistake again. You know, hopefully some of the listeners would be be served good by this mistake.
Well, you know, it's interesting. There's obviously a lot of frauds in China, right? And that's a place where it's kind of, you know, very, very much susceptible to fraud. And, you know, if you look at net nets over the years, that, you know, if you bought a basket of them, you've done pretty well. But what's interesting is I'd always wondered if, have you ever done a screen for net nets before?
I moved away from net nets after a very, very long time.
Okay. So generally, you'll often have a lot of these Chinese companies show up, and you know, a lot of them.
I can imagine that.
Yeah. So a lot of them end up being frauds, which for obvious reasons. But what's interesting is that I had always wondered if buying a basket of those Chinese securities would have, you know, if you would have included the Chinese securities in that portfolio, would it have increased your returns or would it have decreased your returns? And I didn't know either way, actually. And I thought that maybe it increased your returns and that, you know, even if a few of them were frauds, the ones that weren't frauds would more than make up for it. So I actually looked at it, and it turns out that if you had included those Chinese companies in your net portfolio, it would have actually had a negative impact on your returns over time. And I thought that was interesting. So I think there really is something to be said about, right, if you can avoid things that you know are going to be kind of stupid. And, you know, if you can avoid Russia, right, or you can avoid a place where the government can take you out like Venezuela, you're not even going to be susceptible to something like that.
Yeah, that's right.
You know, I think that's smart. On the long side, though, what are you looking at? Either that you're long right now, or thinking about buying. Oh, let's talk about something that you actually own internationally right now that you think is interesting.
Yeah. So I don't know how many of the listeners would know, but this is a famous company in Mexico. Mm-hmm. One of the largest, if not the largest, media company in Mexico. The company called Grupo Televisa.
Okay.
The ticker is TV, so it's an ADR, trades here as well as in Mexico. So the company has like literally three dominant businesses. If you think about it, it's like a Comcast attached with the DirecTV business. So they have the largest broadcasting business, the content generation, and number two, they have the two largest distribution businesses. One is the cable broadband business, along with the DirecTV joint venture with DirecTV North America. So they own the majority control of that particular entity, and they own 100% of the cable broadband business. And other than that, they own hodgepodge of smaller unrelated businesses in Mexico, like soccer stadiums and movie distribution and bunch of things like that. Lottery businesses and some convenience store and some casino operations. Those are like very small in terms of the value of the company, but they're out there.
Interesting. And how are you valuing the business? Why do you think it's cheap?
Yeah, this is gonna sound like a real joke. If you talk to any businessman who understands each part of that business that I said, the content generation, and the cable media distribution, as well as the broadband and the DirecTV majority control, any one of those divisions can be worth as much as the market cap today. So let me give you some numbers to articulate.
Please.
So the company generates, let's take a look at like one division, the content broadcasting business. The company makes about $700 million in EBITDA. That particular division, okay, and this is all in U.S. dollars.
Yep.
So $700 million in EBITDA, the content division. It's about $850 million in EBITDA in broadband cable division, about like $400 million or so in other division, including the DirecTV operation.
And what's the other include besides the DirecTV operation?
The bunch of smaller businesses that I talked about, the casino operations.
Yeah, got it. Okay.
They're very small to the pie. Maybe they're like 10% of the overall EBITDA.
You said that was $400 million?
Yeah.
So you have $400 million, the other $850 for broadband and cable, and then $700 million for the content business. Okay.
Yep.
Just trying to get this down. Okay.
Yeah. So and they own a royalty stream from Univision. So basically, they produce the content and they give the same content to Univision in US. So Univision has a rights to distribute that content here. So they get a royalty of 16.5% of total sales.
Okay. And what's the total sales been?
About $3 billion a year, every year. That's US dollars.
That's total sales, or that's their cut of the sales?
No, that's total sales. So 16.5%, you're talking about $450 million approximately.
Right.
And that's all falling to the bottom line because there's almost no extra cost attached to it if you need to.
Yeah. And is that $450 million? Is that growing?
Approximately. That's actually they're not as growing, but the royalty rate has increased in 2018. The royalty rate used to be 11% until 2017. 2018, that royalty rate kicked up 16.5% for another 5 years.
And why did that happen? Was that just part of the contract, or?
It was part of the contract. Like 10, 15 years ago, they made this contract.
And then what happens after 5 years from now?
Well, they will renegotiate, or maybe within the next 5 years, they'll renegotiate. And interestingly, they also own up to 35% of the equity potentially of Univision.
How does that work? What do you mean potentially? How does that structure?
So they have lent the money they own 10% economically right now. They own the 10% equity. So they can potentially convert 26% of the money that they lent to the company. They can convert that into a 26% equity.
Interesting.
So,
okay.
So they could potentially own 36% at some point.
Okay. And you think that, do you have any kind of insight on when those 5 years come up, what that's going to be negotiated to?
Probably around the same numbers.
Okay.
It depends on the economics at that time because the media broadcasting division of any country, especially Univision or here, US, that business is not growing. Mm-hmm. So they could like renegotiate at the same price or maybe a little bit lower.
And what did you say the total market cap of the whole company was right now?
$5 billion.
Jeez. Okay. Are they buying back stock?
They are very recently buying back stock, yes.
Okay.
And the company's founder's son, he owns about 16% of the company, and he controls the company through a different class structure. And Bill Gates' Cascade Capital owns about 11-12% of the company. And Harris Associates, Oakmark, they own about 7% of the company.
Why do you think it's so cheap?
There are, you can always speculate why that could be, because few things have to happen. People are wondering about how this media business has to be separated from the growing businesses. One is a cash cow, the other one is consuming the cash, which is the one growing. And people thought the Univision was supposed to go IPO for a few years, and that never happened. John Malone put some of his lieutenants on the board of Televisa to maybe orchestrate a deal to buy Univision before they bought the Scripps network. So that did not go through. And the IPO that they planned to do that did not go through. So people are basically saying this will never happen, and which means they're looking for a catalyst, and there is no catalyst.
Interesting. Okay. Huh. Well, I guess the catalyst would just be the continuous cash flows, right?
Catalyst is the cash flow and the cheapness of the company. And 5 years from now, they will have equal cash as to the market cap today.
That's wild. So what kind of allocation is this for you?
About 8%.
Okay. Huh. Is it your largest position or
One of the largest, yeah.
Okay. Interesting. That's an interesting idea. Do they pay a dividend?
They pay very small dividend, but all the cash flow that they generate, it's basically going to the cable and broadband division, which is the growing division. It's amazing. So they have 14 million passings to the home in Mexico. They are the second largest broadband provider in the country. The country has less than 50% like broadband penetration. And these guys have 14 million homes passing. They have customer base of 4.5 million. So there is already built-in infrastructure. They just need to connect the customers. We don't know when they will connect it. We don't know when the customer is going to show up. Maybe they'll show up a year from now, 2 years from now. But when they do show up, almost all the money is going to the bottom line. And they're increasing their presence. And they likely would buy out smaller operator and build that asset. And they're increasing the home passings every year goes by. So all the cash flow is basically going there, which I very, very, very much endorse that they do, because that will be the business make a lot of money, especially the broadband business.
Did you come across this just by looking at cable and broadband companies in general?
I came through a few different ways. I knew Bill Gates' Cascade Capital owned this for a very long time. So that's one reference.
How's their track record? Do you know how their track record is?
I can't say, because there are some are private, some are public investments. So it's hard to say. And they're always moving from one to another, from Microsofts to others and things of that nature. So it's hard to come up with a number. And they're not public anyway, so they don't have to disclose it to anybody. But I would say, if not the greatest, they would probably be good enough. Maybe an S&P 500 type returns.
Yep. So anyway, my question, how did you come across this?
Yeah, so I knew that Cascade owned it for a long time. And I came across this news in 2015, 2016 time. John Malone is putting the lieutenants on board of the Televisa. So then I looked at it, what was the deal and why he would be interested in such a thing. And then I realized, and then I looked the business deeper, and then it looked more and more like, not like a Charter, more and more looked like a Comcast to me. It's one side of the business is not growing fast, or maybe they go through an ups and downs on the content advertising networking business. And then this side of the business was very small, 5 years ago, 10 years ago, and the broadband business was just keep growing. And I obviously am an investor in some in U.S. Cable businesses.
What cable businesses are you invested in the U.S.?
Actually, I own indirectly a Charter, which is GCI Liberty.
Oh, I own GCI too.
Okay.
Full disclosure. Wow, I think that might be the second time I've ever disclosed a position on the air. Full disclosure, I'm a shareholder, and my clients are shareholders of GCI Liberty too. I just gotta get that out of the way. Okay, cool. Do you own any other cable companies?
No, those are the only two.
Okay. Have you ever?
But the reason,
yeah, go ahead.
The reasons were they operate in a market that's underpenetrated.
Yeah.
And I like the economics of that business. Once you lay the pipes and you just small incremental capital to add capacity, and the cable has one of the best throughputs in the industry right now, coaxial or fiber, and the penetration has to go up. There's only one way. If you actually
how does the cable business in Mexico compare to the United States? I don't know anything about the cable business in Mexico.
The economics are the same. The price points are a little bit cheaper.
Okay.
If you look at for an average customer in Televisa, they may pay like $15 a month for the cheapest broadband. You're talking about a 25 meg broadband speed.
That's an industry where, depending on the country, you could actually have pretty different economics. So that's why.
Sure. The economics are almost the same. The price point is very different. That's what it's important. Like how much money you need to put today to generate what the revenues versus like 40-50% EBITDA margin on that.
Okay.
That's the important part.
Got it.
But yeah, the capex needs relative to the yeah, sorry about that.
Well, was it like a lightning hit or something?
It's a thunderstorm. It just knocked the power out and it came back, but it took me a few minutes to restart the router.
We were talking about the cable industry.
Yeah, the cable industry, especially in Mexico, the economics are pretty similar because the revenue per customer relative to the capex is still very, very attractive. And given that there's a large growth left to untap, so it's appropriate to spend the money on the cable division, and broadband division.
Okay, gotcha. Interesting. Have you read Cable Cowboy, by the way?
I have, yes.
Yes, I like that book. Did you like it?
Yeah, John Malone is one of my heroes.
Oh, is he? I didn't know that. Okay,
yeah.
Cool. Yeah, he's great. Does things very differently, that's for sure.
That's right.
Now, I wanted to ask you just about when we were at Markel. You were saying you're starting a new fund. Is that correct?
Yes. So some of my current investors, I only invest for them globally. Mm-hmm. So they don't have access to India directly. Like I can buy some ADRs and stuff, but they don't have access to India correctly.
Okay.
So they have asked me, like now frequently, that would I be able to provide them any kind of access like that? They would be interested. Mm-hmm. And I've been looking, so I've gotten to the point that there is enough demand from my customers and potential customers, and I'm in the process of setting up a fund which would mostly invest in India. That fund is dedicated to Indian opportunities.
Okay, interesting, cool. And is there anything in India for because actually it's interesting. We actually have a lot of Indian listeners on the show.
Oh, that's great.
Yeah. So love you guys out in India who are listening right now. For those out in India, or for those who are able to invest in India, because there are some hurdles for Americans. Is there anything interesting you're looking at in India right now? Yeah,
actually, there's a bunch of things that are interesting. From the businesses, like the really great businesses to average businesses.
What's your best idea in India right now?
Well, I can't say if this is the best idea, but I would say this is one of the good,
What's the best idea in India that you're willing to talk about right now on the show?
Okay.
All right.
So this business is like pretty close to a business you have seen here. It's called American Tower.
Of course,
they basically own mobile towers, and they're a co-location owners, and they lease it to the cell phone providers to connect the networks. And the company that I want to talk about is the company called Bharti Infratel. Mm-hmm. So to give you a size of the company has about 92,000 mobile towers in India. 92,000.
Yep.
And the company generates about $2.5 billion in sales, US dollars. Mm-hmm. And it produces about like $650 million in free cash flow. I mean, you need to know the economics of the business if you want to talk about it. So if somebody puts up a tower, let's say American Tower, right? American Tower puts up a tower here, and it costs them about like $280,000 to begin one tower. And when they join one customer, let's say AT&T customer, the return on equity or capital will be like 6%. When the second customer joins, the return on capital goes to like 11.5%. And the third customer joins, the return on capital goes through like more than 20%. So that's the general economics. That's why AT&T is not very, very advantageous to have their own network, own tower base. So the sharing of tower base is very, very economical, both for the tower owner as well as for the client, which is AT&T or Verizon. So this company has unbelievable return on capital and 20% return on capital. They have like 45% EBITDA margin, And interestingly, they have no debt. They have absolutely no debt. They have net cash on the balance sheet. I would say about like a little close to 350 million US dollars. And the company produces 650 million in free cash flow. The company is trading for 7 billion US dollars.
Wow. Interesting.
And they are actually in the process of buying out a joint venture, which they have participated over the years, to buy it whole. So that will increase the towers to somewhere like, you're talking about another 50,000 towers, so 140,000 towers or so.
Mm-hmm. And this is a company that there's no ADR, right? You actually have to be able to invest in India to do it.
There is no ADR. You have to be a direct participant in India to buy this.
Yeah. So for those who are interested, who are Americans listening, who want to invest in India, what's the way to go about doing that? Because I know it's a lot.
Yeah, it's individual basis. It's really tough. So you have to participate through some funds, and there are some mutual funds out there, and they usually hugging mostly to the indexes.
Right.
So they don't really look at like individual securities the way you and I look at.
Mm-hmm.
So if you need to invest in individual securities, say value type.
Yeah, if someone wanted to buy this stock and they're an American, how would they go about doing that?
So they have to set up something called foreign portfolio investor. It's a license. You have to be like opening a brokerage account. You need to be approved by the Indian regulators to speak of, and you have to go through an Indian broker custodian, and to set up that, and you have to get like a PAN card, an Aadhaar number, and all of that to go through that. It could take anywhere from like 6 months to a year to set that process up. And hopefully the broker custodian would allow you to do that even within that time, because you need to have some established the fund base so that they know that you're going to do a reasonable amount of business with them. So it's worth taking you as a client for them.
Right.
That would be the way to do it.
So for someone like you who's not doing a lot of buying and selling, why would they take you as a client?
Well, they just need to have some sort of either the business volume or the asset size. It's matter to them.
Got it. Okay. Gotcha. That makes sense. That makes a lot of sense.
Right.
Interesting.
So I'm in the process of setting that fund up, and we will essentially participate in companies like this. This is, I would say, what I call like really, really good businesses with almost no risk of obsolescence in some ways.
Mm-hmm.
And the price is very cheap compared to the international counterparts. And it's the best way. You're talking about like a 9.5% free cash flow yield, which they distribute like 2/3 of that every year. So the dividend yield today is like 6%. So they only invest like a small portion of that for capex, like growth capex to speak of, because you cannot just increase the number of tower base without increasing increasing need from the users. So they are very, very measured growth, and they don't borrow any money, and they will do it at a very, very conservative basis. And You're talking about like 9.5% yield, growing inflation plus number, but with almost no risk. There's only one way to go. Compared to developed markets, India doesn't have a fiber or coaxial infrastructure to get the fixed broadband. So lots of data has to go through these towers over a very long time.
Yeah.
And the data usage, you could tell it's exploding in a year-to-year basis in Indian consumers.
Gobi, it's very interesting. I wish you the best with that.
Thank you.
Yeah. Wow. Cool. Well, maybe in about a year from now, you could come on once you've. Are you looking on starting that this year?
Yes.
Okay.
Hopefully, I'll be done setting it up within this year, and you will know. I will.
All right. Cool. Keep me posted. Yeah.
Yes, absolutely.
And maybe we can have you back and talk a little bit about some of the stuff your fund's doing when you have that
absolutely
fund.
Yeah.
Cool.
Hopefully not to reveal too many interesting ideas.
Oh,
just one at a time.
Just one at a time. Okay, cool. Well, Gobi, it was great to have you on, like always. And maybe we'll wait more than that. I don't think it was 3 years. It might have been like 2 years, maybe. But we'll have you on more than every 2 years. How about that?
Yeah, that sounds good. Yeah, I mean, I love talking to you. I love talking to some use to the listeners of your podcast, and hopefully we'll have something interesting to share when I come on next time. And it's always a pleasure to talking to you, Eric.
Your episode was the first to get over 1,000 downloads, so people clearly like what you have to say. And I'll hit you up next time I'm down in Virginia. I come down there quite often.
That sounds good. Thank you.
All right, cool. Yeah, sounds good. We'll grab a coffee or a drink or something like that. All right, Gobi. Great to have you on, and I hope you have a great rest of your day.
Thank you. You too, Eric.
All right, take care.
You too. Bye.
All right, bye.
Thank you for listening to the Intelligent Investing Podcast with Eric Schleien. If you'd like to connect with Eric for questions, comments, feedback, ideas, or to inquire about being on the show, please contact Eric at intelligentinvesting@gmail.com. So, in the words of Charlie Munger, I have nothing to